Markets Forward, your go-to show where we'll tell you what all went on today in trading action and we'll set you up for tomorrow as well. I'm Nigel and with me is Rima. Well, Rima, a flattish session, but the pain in the broader market continues. And with today, in fact, another down series, the bears will feel on top. Fifth straight series, we're down.
Yeah, and that's not happened in nearly 28 years. And in the last 5 series, the Nifty's lost 14%.
Ooh.
Of that, 4% has come in just in the February series. But today, when you just look at the benchmark indices, absolutely quiet, very range bound. The Nifty traded in less than 100-point range, and by the end of it, it was just 2 points down on the Nifty. The sensex was up close to about 100 points. But as Nigel said, the problem and the pain is in the broader markets. The mid-cap index fell more than 1%, small cap index even more. Look at the advanced decline ratio. We had 2,200 stocks with a negative tick versus less than 500 stocks, which managed to advance in today's trading session. Banks too gave up all their gains in the last 1 hour of trade. The final tick on the Nifty bank is positive, and that's because of averaging, but generally you would have seen a sharp downtick in the Nifty bank in the last 1 hour of trade. Individual stories, well, while the Nifty bank gave up its gains, NBFCs were higher in trade, lots of them dominating headlines, and on the way down, cables and wires. So these were the 2 big stories. We'll talk more about it in our show today. We'll track all the big news, the key developments in Dalal Street, the top corporate voices, and the events to track. But let's also, tell you what the big movers and shakers of the day are. Hormus is now joining in.
It was a quiet end to what was a forgettable series for the markets, but the broader markets did not reflect that kind of a sentiment in today's trading session. Starting off, of course, with the story, the sector and the stocks of the entire day, and that were the wires and cables companies. A $200 million foray from Ultratech has resulted in a $3.5 billion erosion in the market cap of these 5 companies: KEI, Polycab, RR Kabel, Havels and Phenolex, all of them, and 3 of them ending with losses of 18 to 21%, and the other 2 as well seeing 6 to 7% of losses in today's trading session. On the flip side though, every single NBFC that you would open up in today's trading session ended in the green, and it was Credit Access Grameen that led the charge. There was a bit of a cool off towards the later part of the trading session, but still ending with gains of around 9%. AU Small Finance Bank, Shriram Finance, L&T, M&M, all of them ending with healthy gains in today's session after the RBI relief that came in on the norms there. Some of the stocks that are getting excluded from the FNO space in today's session saw a bit of a sell-off today. GNFC ending 10.5% lower. Sun TV, PVR, Inox, all of them seeing sharp cuts. Of course, these are just 5 out of the 16 names that will be excluded from the FNO space. It was a 4th day of losses for the real estate sector, among the top sectoral losers in today's trading session, with Prestige Estates and Phoenix Mills leading the pack, and most of the others too seeing losses of anywhere between 2 to 3%. And lastly, some green that came in on the screen, barring the NBFCs. It was Bharti Hexacom that ended 5% higher. Inox India saw a sharp sell-off towards the close of the trade, but ending only 2% higher. At one point was up almost 10%. Just Dial, after some positive brokerage commentary. Bajaj Holdings and Bear Corp too having a good day at the office today.
Well, thanks a lot for that, Hormus. Well, those are all the top stock movers in today's trading session. Let's hop across to our guests. We have Ambareesh, Baliga, as well as Ruchit, Jain of Motilal, Oswal, who joins us on the show. Hi, gentlemen. Thanks a lot for joining in. Ruchit, what are the odds? March is going to be a good month for the bulls. It's been the bears all the way, as Rima just told us. A 13 to 14% cut is what we've seen on the Nifty. Do you think it's getting a little bit excessive? And do you think maybe with 22,000 as a stop, you expect this market to bounce up?
Yes, hi, very good afternoon, Nigel. Nigel, if you look at last few trading sessions, I think every pullback move is getting sold into. But what has changed now that some of the large cap names have stopped going down, but the mid caps and the small caps are still witnessing a continuation of the downtrend. So we believe that March series could be a mixed bag where we won't see any significant down move in benchmark index or the large cap stocks. But until we get any signs of reversal in these mid caps and the small cap names, I think the broader markets would not see any kind of significant run-up, at least in the first half of the series. So I think for the next series, we are also advising our traders to focus more on the larger names. Today also we saw that some of the names from the banking and the NBFC space did well. In fact, Nifty Private Bank and Nifty Financial Services, these are only indices where the January lows have not been breached yet. So clearly a relative outperformance has been seen in the private banks and NBFC space. And I think such stock-specific or sector-specific outperformance would be seen in the March series, but definitely no signs of no bottoming no for the broader market. So mid caps and small caps, I think maybe some more pain could continue.
Okay, pain for the broader markets, but maybe for the headline index, there could be some hope. Well, stay with us. Ambareesh, we're going to come across to you and ask you about the cables and wires business, but let's run it through the news piece first. Ultratech Cement, they have announced their plans that they want to move in the cables and wires business, and for that, they're going to be spending 1,800 crores. They're going to be setting up a facility in Bharuch, that's in Gujarat, and they expect it to get commissioned by December 2026. Now, why will they be thinking about something like this? One is that the industry itself is growing at 13-14%. Industry size from 80,000 crores is expected to go to 1 lakh crore. The other factor is they have Hindalco, which makes copper as well as aluminium. So in that case, there is some backward integration. And also they're talking about Ultratech Business Solutions. They believe they want to grow that part of the business, which currently has close to around 4,400 stores. Even on the return ratio basis, well, that is relatively more attractive. So margins of the cables and wires business will be relatively low in comparison to the core cement business. Around 10% approximately, that compares with around 15%. However, the ROC, as you can see, of a cables and wires business is much better. How do the numbers stack up? 1,800 crores is what they're putting in. The revenue potential will be 7 to 8,000 crores odd. Margins will be in the vicinity of close to around 11% or thereabouts. And as a percentage of their total annual capex, it's very, very small. It'll be less than 10% of that. What then the street like? Why was Ultratech under pressure? Because the street says you're diversifying. There's question mark in terms of the asset capital allocation. So the street didn't like that. Instead, if you had plans like this, you should have rather done it under Grasim. A brokerage like Jefferies, they said that they believe this dip in the stock price is actually a buying opportunity. So Ultratech's plan to get into the cables and wires business didn't meet with a very, very good response from the street. But the sector that was under pressure was all the names, whether you talk about Polycab, Havells, or even KEI, all of them did see a sharp downtick. In fact, let's hop across to Upasana. Ultratech saying they want to put in 1,800 crores. The market capitalization of Ultratech itself, well, that one did come down by close to around, to give you a couple of numbers, Rima, 1,800 crores is what they want to spend. Ultratech's market capitalization erosion was close to around 12,000 crores. And all the cables and wires players put it together lost more than 30,000 crores of market capitalization. So this 1,800 crore investment, led to market capitalization getting wiped out of close to around 40,000 crores. But Upasana is with us. Upasana, tell us more.
Well, cable and wire segment saw very sharp sell-off today, as highlighted by you also, Nigel. Now, Ultratech Cement plans to enter wire and cable segment with an investment of 1,800 crore. Now, what is the street eyeing on? The street thinks that this may intensify competition for existing large players. Now, if we look at FY24 market share of the top players, Polycab stands at 26%, KEI at 12%, followed by Havells, which stands around 11%. Now, HSBC believes that this entrance of Ultratech is likely to have a material impact on major companies' growth and margins beyond FY27, that is after commissioning of the plant, and it has lowered the target price of all the major players between 7 to 23%. On Havells, it has given a buy rating with a target price cut of 6.5% to 1,730 per share. Polycab also, it has given a buy rating and cut the target price by 20% to 6,250. KI Industry, the brokerage has given a hold rating, cut the target price by 23% to 3,450. And lastly, on RR Kabil, HSBC has given a buy rating and target price of 1,260. Now, Jefferies believes that it foresees a lower competitive impact on Polycab as compared to other B2C and housing players like Finolex Cables and Havells, and it continues to prefer Polycab as its top preferred pick in the sector. Now, Motilal Oswal says that the earnings of cables and wire companies will not be impacted until the plant is commissioned. Cable and wire players may experience a valuation derating in the multiples going forward. While there will be no change in earning estimates for these companies over the next 2 years, there could be a derating in their valuation multiples due to entry of a sizable large player. Now, when we look at the valuations currently, even after the steep correction that was seen today amongst all these major players, valuations are still above the 5-year average, up nearly about 25 to 50% above their 5-year average is what we are seeing. Hence, this space remained in focus today on the back of this.
This is very big industry, and like almost 85-90,000 the industry size was last year, and it is further grown by almost 13 to 15%. And this is such a fragmented industry, and there are not many even unorganized player also. So if a big player comes like this is always a nice move where more strong player will be like get bigger margin of market share. And though it is very like quick reactions from market, and it is very like on negative side, market is concerning. But what I see, this is like for players like us, it is good time that we can also have our growth plan intact, and we see good consolidation in market. But it is not that much like disruptive what market is reacting as per me. So first, when we see from like margin point of view, first you need to see that it will take at least like 2 to 3 years to come into production, and again getting a sizable size of production and getting established in market. It may be another journey of 2 to 3 years. So it will altogether like 4 to 5 years minimum to take sizable size, even in this overall industry, which will be like around 1.5 lakhs by FY28 or 29.
This and the market space is big enough to give space to another player. Number one. Number two, Ultratech will take minimum 3 years to start their production. Whatever somebody may say on paper, 2 years, but we have our long experience in developing the industries. Number three, it will take minimum another 3 to 4 years to or 5 years to develop the brand for wires. They may not be able to disrupt the market by just slashing the prices, because it is in this space, it is very difficult to increase the prices once you slash them.
Okay, all right. Well, Ambareesh, I wanted your view on this. It seems Ultratech Cement has been the disruptor today, disrupted its own stock price and the industry as well. What would you do? Tell us. Buy Ultratech after this correction, and from these cables and wires players, in a single day, they've lost 10 to 20% of the market capitalization. Buy or not?
Yeah, I'll come to that. But before that, I'll just tell you that when they were entering the paint segment, I mean, we thought they won't be able to make any dent. But finally, they did. Asian Paints has lost some market share. Their margins are under pressure. Again, I'm not commenting on the long term, but at least in the short term, it has created issues for the existing players. And now the arguments are the same. Selling paints is different compared to selling cement. And now the cable manufacturers are saying selling paints and cement is different compared to selling cables. But then today, people would look at Birlas differently. I mean, you go back 2 decades, Reliance had planned retail. Many had, in fact, written off, saying that they don't have the mindset to do retail. And that's history now. So deep pockets and the ability to attract the best professionals, I think that makes a lot of difference, which they have done it extremely well. I think the big question next is, this Birla group runs something called Birla Pivot. I mean, that's a B2B e-commerce platform for building materials. I don't know how many people are aware of this. It seems that they want to fill up the supply side with all the in-house brands. So they've done paints. Now they are doing cables and wires. I don't know what next. I mean, it could be tiles. It could be sanitary ware. I think we have to just wait and watch. Now, I mean, what should we pick up when stocks have fallen like this? Yes, since the announcement has just come, the effect will be short term, and then there'll be a gap. And finally, when they finally launch their brand, that's the time you'll see the real effect, like the way we saw for Asian Paints and the other paint stocks. So, I mean, after this fall, maybe if Baliga falls possibly either 400, 500 rupees, closer to the levels which we had seen in December, January 2024, I mean, post those IT raids, I think at that price, Polycab becomes a decent buy, at least for a decent bounce back in the short to medium term.
Ruchit, in the cables and wires space, is there any trade? Maybe someone can still go short at can short at these levels, or is there a buying opportunity which emerges?
There was already a gap down opening today, and we have seen almost on an average 18 to 20% down move in most of the names. So I think the risk reward ratio for going short does not become favorable, since the stop losses will be too far if you open a fresh trade over here. But definitely, I won't advise doing bottom fishing as well, just because the stock has fallen 18-20%. Because many of the stocks have seen a very high volume sell-off, and whenever we see that selling is supported by high volumes, those stocks tend to underperform in the markets going in, and already the broader markets are not doing well. So I think not a good time to do any bottom fishing as well over here. It's better to ignore any kind of trading opportunities in space for now.
And Ultratech, what is the chart telling you?
So I think Ultratech cement, the longer term chart structure still seems positive, because we have seen that high top, high bottoms structure getting continued on the monthly charts. So maybe this would be a short term reaction to the news flows. And if I look at some retracements of the previous up move, then somewhere in the range of 9,500 to 10,000, the stock should manage to form a good bottom in this week. So I think yes, if we get the stock below 10,000, then those ideally should be good levels to start buying Ultratech cement over there.
Ambareesh, Ruchit, thank you very much for joining us today. We will slip into a very short break. On the other side, we'll tell you why banks and NBFCs gained in trade, along with the top corporate voices of the day. Welcome back. You're watching Markets Forward, and in a big relief for NBFCs and micro lenders came through after RBI eased risk weight norms on certain loans. NBFCs and MFI stocks rallied on the back of this announcement. Abhishek is here with the details.
Well, RBI has reduced the risk weight asset requirement for certain loans that is in the category of MFI and loans to NBFCs from banks. So if you take a look, the bank loans to NBFC sector was growing at 30% plus on a YOY basis last year when the ban was put in place with respect to increasing the risk weight asset, and hence the loans became costly. Now the growth from banks to NBFC as of December data shows at 7% YOY, which might have led to this kind of a relaxation coming in from RBI. So they have restored the risk weight asset on the lower side back to where it was pre-November last year, that is 2023. So microfinance loans risk weight assets have been reduced by 25% and bank loans to NBFCs also by 25%. Now IFL Securities has written that there will be an impact of anywhere between 7 basis point to 170 basis point for banks CET1 ratio, that is common equity tier 1 ratio. So higher benefit will be for Bandhan Bank, Bank of Baroda, Ujjivan and IndusInd Bank as well. So stocks which gained in trade today were Bandhan Bank, Credit, RBL Bank, L&T Finance, Chola, Shriram Finance, AU Small Finance Bank as well. Back to you.
All right, Abhishek, thanks a lot for that. Well, let's take a look at all the key corporate voices that join us during the course of the day. First up, Sidma SGS Technology. They guide to grow at around 30-35% in FY26 and they expect to achieve 7.5% margins. The management also expects exports to grow by around 20% and hit close to around 1,000 crores in the next fiscal.
The management of Muthoot Finance believes opening of new branches will aid loan growth. They expect AUM growth to be between 25 to 30% for this year on a standalone basis.
And lastly, Titagarh Rail System bets big on the shipbuilding as well as the marine businesses to bolster its growth trajectory. It also plans to construct additional yards in the eastern and the western regions. They believe the next 6 months are vital for the shipbuilding vertical.
And before we wrap the show, we'll bring you some of the key market events to watch tomorrow. Abhishek is here with that.
Well, Rima, to begin with respect to India, watch out for RBI, which will come out with key data with respect to the business momentum of the bank. So deposit growth and loan growth will be seen closely. Deposit growth last time was around 10.3% YOY, and loan growth last time around was at 11.4% YOY, leading to the highest ever credit deposit ratio for the banking sector. Forex reserve data will be given out by RBI. It was around $636 billion last time around. Watch out for other data with respect to India infrastructure output, GDP growth rate, as well as fiscal year GDP growth rate second estimate will come out. With respect to USA, watch out for the core PCE price index month on month. It is expected to grow at 0.3% versus 0.2% last time around. Personal spending month on month, it's estimated to decline with growth rate coming down to 0.1% month on month versus 0.7% month on month that it had come last time around. With respect to RBI, they will inject liquidity through a 10 billion forex swap auction for a tenure of 3 years, which will be conducted tomorrow. This will be the second forex swap action by RBI in a month. Last time they had done $5 billion forex swap in Jain. With respect to some of the key other events to watch out is IRDA, that is IREDA, as well as Tata Tech. They will be included in the FNO effective tomorrow. MSCI announced changes pertaining to February index. The review adjustment will be taking place tomorrow in trade. Back to you.
Thanks a lot for that, Abhishek. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates. So stay tuned. We'll be back on the other side.